Hi, this is Yahoo. I'm macro option trader. Today is January 29, 2026. It's 9:39 a.m. Japan time. Um, Usual, I'd like to start by reviewing the market and then move on to monitoring some macro indicators. Let's begin with the Nikkei. Yesterday's close was 53359 yen. After dipping briefly last week, the market has rebounded again. Right now, we are around 53469 yen. So overall, we are moving within a range of roughly 52000 to 54500 yen. It feels like a higher level range market, a kind of chunk of wall near the highs. Volatility is still quite elevated. The volatility index is around 33.34. The Nikkei PL is 19.74. And yesterday's EPS was 2703 yen. EPS is extremely strong, probably near historical highs. And so we continue to see strong equity price, but still within high range consolidation. The 30-year Japan government bond yield is still hovering around 3.6%. USD JPY, after some bubble intervention, is riding around 153.42 yen. In Japan, the market remains stuck in a high level range. One thing to keep in mind is that with price staying elevated for so long, entry costs have been rising. That means unrealized profit are slowly being eroded. Over time, this gradual compression of gains is something we need to watch carefully. And now let's take a look at the US market. The S&P closed at $6978 and the VIX is at 16.35. The US market feels relatively calm. The 10-year Treasury yield is around 4.86%. Not much change there. And the real star of the market is right now is gold. Until recently, semiconductors were leading, but gold has clearly taken center stage again. And yesterday, gold closed at $5189. And this monitoring is surged into the 5400 range dollar. This is an incredibly strong gold market. Gold volatility measured by GBC has risen to 39.67. Momentum is extremely strong, possibly among the strongest we have ever seen. Because of that, gold is something we need to treat with cautious. At one point, it's briefly touched $5600 before pulling back. This kind of move is clearly sharp such. Several factors may be driving this. Geopolitical actions by President Trump toward countries like Venezuela and Iran are one factor. In Japan, discussions around reducing consumption tax on food and upcoming general election are also contributing. Together with ongoing war risks, these factors are pushing inflation expectations higher and driving gold sharply upward. Gold functions as kind of a put option within the capital market. So when gold rises aggressively, it may be signaling risk that equity market have not fully priced in yet. That's something we should take seriously. Bitcoin is trading around $89,300. It remains fine, but feels more like it's following gold rather than acting as the main driver. The Nikkei move fast, then gold followed. US equities are not weakened. They are still near highs. But in terms of the momentum, they don't feel exceptionally strong. Looking at individual stock, one thing that stands out is Goldman Sachs. its stock price has started to soften slightly. Fundamentals remain strong, but this may indicate a short-term adjustment. Large financial stocks are worth watching closely. Although that's when the market stands today, and again, gold is a key asset to monitor right now. Regarding Japan's general election, many expect Mr. Takaichi to gain momentum. I share that view. If the ruling party regains the majority, a centrist reform group may lose seats. With policies like a tax cut and a table, a fiscal expansion could accelerate reinforcing inflation expectations. That said, Japan also holds strategic resources like rare earths, so I don't necessarily believe the yen will continue to weaken endlessly. I'm not overly concerned about one way across the yen. Still, from a market psychology standpoint, announcement around tax cut and can temporarily pushing market toward inflation trades. So it's something to stay aware of. But overall, the core political scenario in Japan likely remains unchanged. Now, turning to macro indicators in the US, there are no strong sign of instability. The RMZ is expanding and electricity consumption remains solid. So at this point, there's nothing particularly alarming in the US data. Japan, however, is more concerning. Japan real MSM peaked around May 2022 and has been declining steadily since then. It's now quite weak, like reflecting the impact of the higher interest rates. This deserves close attention. Electricity consumption in Japan is also weak. This is one of the weakest level we have seen in a long time. Despite the hot summers and the cold winters, power demand has not picked up. Electricity price on JPX has fallen below 1 yen, which is extremely low. While AI-related power demand gets a lot of attention, actual electricity price suggests overall demand is still soft. This may reflect reduced individual industrial activity. In the long run, this could become negative for equities. On the consumer side, we see sign of stronger frugality. Fewer people at convenience store, but more people buying a vegetable. The sales usually signal rising cost consciousness. Long-term inflation may be pushing household back toward a frugal behavior. Um, Saving money, it's that leads to deflationary pressure. It could become a headwind for the equity market. As for the gold gain, I believe part of the rise reflects AI-driven productivity gains and increase in value created per hour. But if AI productivity fail to meet expectations, a current equity price may prove overly optimistic. That's another risk to keep in mind. At the end of the day, equity markets are driven by supply and demand. Right now, we are in a high-level range market where realized gains are slowly being squeezed. So rather than rushing, it's important to keep observing the market patiently and carefully over time. That's all for today. If you find value in this perspective, please follow my contents with a long-term mindset. See you tomorrow.